We've spent a lot of time talking about the fact that despite the move up in the US dollar over the past week, there hasn't been anything going on in FX that would suggest we're seeing the dollar actually looking to begin the next leg of a medium-term uptrend that has been in place since mid-2018. To illustrate this point, we look at the pound, a currency that has taken the hardest hit this week amidst political uncertainty and Brexit drama. And yet the pound is still well off its yearly low from January and didn't even drop by more than 1% from where the week opened. The New Zealand dollar traded down to a yearly low, but structurally is still sitting off some important support, while Aussie hasn't traded to a yearly low this week, even with all of the risk off, fallout in U.S.-China trade talks, RBA signaling of a potential rate cut, and broad-based U.S. dollar demand. A lot of this could have something to do with the euro, with the single currency perhaps worried about breaking down to another multi-month low, opening the floodgates for a drop to 110 and below against the buck. The euro has just now dropped to a yearly low below 111.10, but has been holding up well through periods of weakness in 2019, and is not determined it wants to be breaking down in a meaningful way from here after already dropping close to 12% off the 2018 high. Flight to safety has definitely been a draw for the dollar, but we've cautioned against things being the same here with respect to this dynamic, given the wrench of U.S. administration trade policy and the soft dollar strategy that comes with it. And so right now, the takeaway is that while it's possible the dollar makes another big run, it would be premature to be getting aggressive with such bets. And if anything, the buck could be about to sell off after testing some key levels without really breaking through. If euro dollar closes the week below 111, it could be a sign the buck is ready to make another big run. But until then, don't rule out the prospect for a big turnaround that has the dollar trending lower, not higher. Euro ATR levels sit at cycle lows after trending down since peaking back at the onset of the 2008 crisis. And when levels on a chart extend too far in one direction, there's a good bet to be made that they will snap back the other way. Perhaps this snapback coincides with a shift in the trend and the start to a secular decline in the US dollar. That's all for now.